return. So she made a 15% return in like 4 days. Good or good? Is that good or good? Thank you. She has managed literally billions of dollars over the course of her career. And she is like broken the ceiling for every glass ceiling for women there is. She's one of the top in the field. She was the first woman to own a municipal investment banking firm in the United States. And she's also written a book, and the book is called A Girl Needs Cash. A Girl Needs Cash. She's here to talk about an investment strategy, a strategy that she's put together that really simplifies investment performance and produces high quality returns. Please join me in giving a huge welcome for Miss Joan Perry.
Thank you. Thank you. Thank you. Thank you. Thank you. How many of you were here this morning? Oh, good. Because the end of the presentation is what I'd like to focus on a little more now. So for those of you who weren't here this morning, I'm going to give sort of a quick overview of what I covered in the beginning, but I'm going to go pretty quickly through that part. Is that okay? Anybody not okay with that? So how many of you have IRA accounts or RRSPs? Yeah. And how many of you have just been kind of sitting with that money without another strategy? Say, that's me. Yeah. And would you like another strategy? Yeah, yeah. Because here's the amazing thing. I went to work on Wall Street in the late 70s, and I really anticipated that that's where I was going to learn everything. I figured you should be really, really rich by hanging around all these people on Wall Street who would know everything. And what I found was that there were some exceptional individuals, but when it came to sort of the overall philosophy of Wall Street and what they teach you, and I didn't say this morning, but have you ever had a statement that you can't read? Yeah. And did you ever stop to think that they don't want you to read it? Yeah. And when it comes to the investing part of it, is it possible that maybe you only learned some strategies but not all the strategies? And that's putting you at a disadvantage when it comes to managing that money. So let's skip through this a little bit. Oh, we didn't get the first slide, but we'll skip it. Let's go on to here. At this point, we really do need to think differently. And why do we need to think differently? Has this been a market where you could have a buy and hold strategy? Yeah. This is what the market's done from January until now. So the Dow Jones is the first one. That's a smaller basket of stock. The NASDAQ's the second. That's your technology stocks. The S&P's the third. There are about 500 stocks in that. And the Russell, which I kind of enjoy focusing on, has 2,000 stocks in it. Now, what these are is these are indicators to you of what the overall market is doing. So, a good strategy is take a look at these indicators. You can log on to CNN Money, Invest Tools, Yahoo, any number of sites. And if you type those symbols in when it asks for the symbol, you'll get a chart. And what would we have seen for this year? We would have seen that in January, the market took a sharp decline, right? In February, it took more of a decline. In March, it took more of a decline. My point to you is it wasn't rocket science. You didn't have to get it in the first initial time frame. But eventually, you get the point that this is a market that's going down, right? So to sit in that market and let your money go away, does that make sense? No, that's why we really need to think differently. But the problem you've had is that you don't have a tool that allows you to approach it in any different fashion. So first we establish the facts, okay? Is it an up market? Is it a down market? The next thing that's important to understand is, how does the market work? The market works like the ocean. You notice that the ocean comes in and it goes back. But the ocean also has another movement. It goes in like this, and it goes out like this. So when you look at this market, what you've seen is that it wasn't just one steady decline, which is part of what confuses investors. It goes up and you think, hope, and then it goes down. But what's happened, it's gone up and then down further, and up and then down further, and up and down further. And that's the absolute typical action of the market. It works like the ocean in that fashion. The second thing that's important to understand is that the stock market has a historical pattern. It goes up for 17 years, sideways for 17 years, up for 17 years, sideways for 17